Years after the fact, the mainstream media is finally discovering that Gen Z is doomed. As CNN puts it, Gen Z is, quote, earning less, has more debt, and higher delinquency rates than millennials did at their age. So if you think millennials are bad, you ain't seen nothing yet. In short, the pandemic did a number on Gen Z, followed by a wallop from Bidenflation, lagging wages, and now a looming recession. How are they surviving? Debt. A new study from TransUnion finds that since 2013, average debt balances for those aged 22 to 24 has risen by 40%, including a 14% rise in auto loans and a 26% rise in credit card debt. For those with a mortgage, which is a vanishingly low percent of Gen Z, the average mortgage debt is up by nearly half to $215,000, which is quite a bit of debt at 24. Now, that, of course, is thanks to the Fed's money printing, driving house prices to an arm plus a leg. This debt has mirrored the savings rate, which plunged during COVID from an already abysmal 6% pre-pandemic to just 3.2%. So Americans are saving 3.2 pennies on the dollar earned. For perspective, in the early 1990s, it was 3 times that. The pandemic apparently accelerated debt, most dramatically among the young. So Gen Z opened new credit cards at a faster rate than even millennials during the pandemic. In fact, during 2020, there were multiple months when almost 6% of Gen Zers had opened at least one new credit card in the previous month. Note, Gen Z has the lowest income, therefore the lowest debt capacity of any generation. Yet, here they are sporting multiple cars and giving them a good workout. All this debt, of course, is now driving delinquency rates, with auto loan delinquencies rising by half and credit card delinquencies doubling since 2022 to over 6% of credit cards now in delinquency. Keep in mind, that's not just carrying balances, that is actual delinquency. Now, all of this is just the debt we can see. So buy now, pay later has edged out avocado toast for Gen Z's favorite daytime activity, totaling an estimated $700 billion in shadow debt. In a recent Harris poll, 1 out of 3 respondents said they've spent more than $1,000 on buy now, pay later, and 54% of users admitted spending more than they can afford. 1 in 4 reported that buy now, pay later is making them fall behind on other lines of credit. Note, a credit card charges 24% interest per year, which is slightly lower than the mafia. So what's next? Brought to you by Unchained.com. In a recent video, I mentioned the fallout from all this debt. With declining sales for low-end staples, from McDonald's to Coke to Kraft Mac and Cheese, a Gen Z standby. Now Walmart is rolling out a private label brand of clothes under $5 to clothe our next generation in all the finery their debt will allow. Gen Z is becoming a financial train wreck, and keep in mind, this is the next generation of Americans. They're facing soaring prices and plunging wages, even as their formative experience of stimulus checks and student loan bailouts has taught them that maybe if they crash hard enough, mom and dad, or the federal government, will bail them out. We are raising a generation of wards of the state, sustained not by productive work, but by debt and handouts. Government spending is unsustainable at 7% of GDP and deficits. They will eventually hit reality. And when it comes, they will be completely unprepared. Read the rest of the article with charts and all the gory details at profstantonge.com. Okay, we'll be watching. See you next time.